Hello and welcome. This is Enda here from bullwaves.org. I always start the same way. There's the homepage, bullwaves.org. This is the home of daily Elliott wave analysis. So if you like what I do here on these videos, check out the website. Okay, shameless self-promotion is done. I'm going to move on if I can. Yes, I can. Yes, I can. Okay, here we are. I'm going to go through the markets, obviously, see what's happened today. It's been, 2 weeks since I've been here on YouTube. A lot has changed since the last video, but if you want to keep up with the charts, get onto the website. I'm going to start going through the dollar FX markets, and then I'm going to move on to the rest. Okay, so we'll start on euro dollar. I'll go back out a bit first. Again, obviously, if you've been tracking with these videos, you know that I'm looking for let's say the completion of a triangle over the next few months in wave E. We've had this kind of, let's say, what's the best way of describing this? This a very labored initial bounce. Let's call it that. It's very hard to know. I mean, we've had so much false starts over the last few months in euro dollar. All I can do is track each move to see, will this one be the, let's say, the expected rally that I've been talking about. I know it'll come, and there is still a reasonable possibility that the kind of bounce that we've got to a very slight higher low at this moment in time, that this could still be the initial move up off. But we have this threatening to break the invalidation line this week, and that threatening has not gone unnoticed. But let's get into the short-term pattern here to see if we can discern what's going on with wave A here. I'm starting to think that it could be a three-wave pattern up in wave A. That would explain this very large corrective sideways move. Let's get into the short-term pattern, and you'll see what I'm talking about. Okay, so this could be wave 1 or wave A. It's indistinguishable at this point. It doesn't really matter because the resultant should be a rally off the low anyway. So either it's a 1-2 or it's an AB. But we do need to see that rally, and that's kind of what I'm, let's say, a little bit apprehensive about. Okay, we've got wave 1 up, a reasonable 5-wave pattern, I think. We've got a running flat, an expanded flat wave 2, or B. So wave 2 starts with an initial move down 3 waves in A. Then we've got this A, B, C move up to a new high in wave B. So that's a pretty solid 3-wave pattern up in wave B. And then we've got a nice 5-wave pattern down, complete. New low overnight, but again, we're hanging above validation line at 108.06. So 108.06 is the key level here. Would love to see a rally today, but I'll just have to see what the market brings when it does open. So far, we're holding above the lows. We do have a 5-wave pattern. Yet to be confirmed that this is a second wave, though. So kind of, let's say, hanging with apprehension here, hoping for let's say, a rally to kind of relieve the pressure on this count. So that's kind of where I stand at the moment. Okay, pound dollar, kind of, we've moved on slightly. Again, I'm looking for the completion of a correction here. As with euro dollar, looking for the completion of a correction. This is a 4th wave correction. We may not be there yet. I think at this point that it's probably a triangle that has occurred here. We've got 5 waves down to complete wave C, but this triangle pattern has emerged over the last few days, and that, I think, is probably the best way to view this. So we may have one more low in cable before we move higher to begin wave 5. I do think we'll get a rally coming pretty soon, but where's all this dollar strength coming from, hey? I thought the dollar was supposed to be dead by now. Oh, okay. I'm being facetious there, obviously. Okay, here's the short-term hourly count in cable. You can see 3 waves up in A, 3 down in B, 3 up in C, D, and E. So we've got this nice contraction in range, and then a nice spike lower out of that triangle. So a completed triangle, fourth wave, spike lower, and a correction. So we may have 1, 2, and the beginning of wave 3 today. Would like to see a break of 129.96 today. Maybe wave 4 or wave 5 of C of 4 to complete down somewhere around 129. Maybe we'll break 129. We'll see. That is the outlook. Maybe a slightly lower low to complete wave C of 4. We'll see how that goes. Here is the mighty dollar yen. The mighty dollar, you might say, because the rally in the dollar over the last month has been, just call it exponential, because it's been. We were looking for a rally. Don't forget, we had this triangle building, looking for a rally. We got that rally, and boy, was it! It just blew the roof off dollar yen. I remember a year ago thinking that we would get 125 in dollar yen, and I remember being poo-pooed. Here we are, 125. Here we go. So I do expect a further leg down. I think we've probably got wave 5 of 1 done. I expect an ABC down in wave 2. You could even expect a decline back towards 114 or 115, but I'm not sure if this is ABC down in wave A of wave 2 or if it's wave ABC down in all of wave 2. It's still to be, let's say, determined. It'll all come out in the wash, I suppose, in the end. But at the moment, tracking 3 waves down. We need this lower high to complete. If it's a B wave, we need this lower high to complete now, and a reversal into a C wave. So we do have 3 waves down in A. We've got a reasonable 3 waves up in B, and that needs to be reversed now with a nice 5-wave decline, sharp, impulsive 5-wave decline down in wave C over the next week or so. I want to see a break of 120, I'd say, for wave C to complete. So that's what I'm looking for there. Here's the 4-hour in the Dow. Again, I've been tracking this 1-2-1-2 pattern in the Dow. We've got a move lower over the last couple of days, but been inconclusive as of yet. No acceleration yet. A little bit, I hate the way people kind of sensationalize something. I read so many headlines about the plunge this week in stocks. Oh my word, this is not a plunge. That's a plunge, or that's a plunge. Or what happened in March 2020, that was a plunge. Excuse me. What happened 2 weeks ago in the Dow was how would they call it? They termed it as like a face ripper of a rally. Still, we're hanging at a lower high though, so I'm still essentially pretty hopeful that we will complete a series of lower highs and we'll turn down into a third wave eventually. Hasn't happened yet. We could track. This is the hourly chart. We could track the downward move this week as a wedge pattern. There is a bit of overlap going on in there. It can easily be a 3-wave correction also. Where my bias lies on that one, but that is a possibility. Looking at it this morning, it could be let's say a leading wedge into a wave 1. Maybe we're working on a wave 2. It could be a series of 1-2s. It could be 1-2, 1-2. In that case, we would have wave 2 here, and then wave 1 and 2 here. In that scenario, then we should not see a break of 5,100 today. So all eyes on what's going to transpire here. As long as we keep working our way lower, then I'll favor the bearish count. So this could be a wave 1 and 2 in pink, and then a 1-2 to begin wave 3. So that's not, let's say, beyond the realms of possibility here. And in fact, why not just reinforce that by changing that to the count right now? So if this pattern is correct, well, it's a mirror of the larger pattern, a series of 1-2s. If this pattern is correct, then we will see a reversal into a third wave decline today or Monday. So we'll see how that goes. In general, my stance on stocks. All right, let's move on. We go to the gold. This is the hourly pattern. On the 4 hour, we'll go to the 4 hour here. Looking for a second wave correction to complete. I think overall, get rid of that. Was overall, I've been tracking an A, B, an A and a B pattern here. It doesn't fit the action this week. The action this week is not a. It's still a B wave, but I think it's a triangular B wave. And I do think it fits. Like we've got this constant contraction going on over the last couple of weeks. It does seem to fit overall. So we've got 3 waves down in A, and then a triangle B wave, possibly completing today, and then we should get another reversal lower. There's there's a tight kind of set of parameters on this triangle now, so I'll show you that in the hourly count. Here is the hourly count. There you've got the 3 waves down in A, or sorry, 3 waves down in, yeah, it should be A. Forgive me. Go here. We've got 3 waves down in A. We've got 3 waves up. Why did I not change that pattern? I should have. Okay, 3 down in a triangle B wave. So an A, B, C, D, and E in wave B. And then we should see, again, a 5 wave pattern lower in wave C. I've given like a mock-up here of what that pattern might look like. I'm kind of looking at this, 78 retracement here, so maybe something around 1840. At a very minimum, a break of 1890, but I do believe that it should go lower than that. If this triangle pattern is correct, then we will see a spill out to the downside, hopefully beginning today with an initial spike. If you see a break of 1900 again, I think you can take that as confirmation that wave C is underway. So looking for this 3 wave pattern to complete next week. Okay, crude oil. Let's go to the 4 hour count in crude oil. If this large B wave high is in at the recent, what was that? Early March high in the 127s. If that B wave high is in, then we are looking for probably a longer term decline to start to take hold here. A longer term decline in the oil market. I don't know what that will coincide with, apart from recognition of a decline into a recession or even a depression. So ongoing war seems to have been overcome now. This war that, God help the people who are suffering through it, both the military that have to fight it and the civilians that have to go through it. I pray God's blessing on all of them. But I think people have pretty much forgotten about it now. That's what the pattern has said. And I think, the news cycle is going to start looking for something else. And I think, just throwing this out here, that once we recognize that the economy has rolled over and we start seeing the initial, let's say, stresses within, both the corporate sector and start looking on the peripheries again. So, risky companies, risky portfolios, risky hedge funds, risky, those fringe ETFs, those fringe kind of, let's say, the high yield sector, which is already up, 50% in the last 6 months or so. You see, like, that's spilling over into kind of uncontrollable declines and yields spiking. That'll be a recognition from the market, basically, that right, we're in trouble. It's time to start panicking. Within the market itself, I don't know if any of you follow David Rosenberg. I think you should. He's a level head that I like to look at pretty much every day. But David Rosenberg was pointing out this week that if you look within the sectoral breakup of the market, the stock market itself, it's already screaming recession is here, because the sectoral breakups, the cyclicals have already turned over and are down a long way. So we still have those big headlines that haven't turned yet. I think once they start turning, people will forget about war. They'll forget about everything. The oil market will crash. the economy will crash, the stock market will crash. That's just, that's my base case at the moment. Take of it what you will. At this point, it seems like even the oil market has discounted what's happening. Okay, here is the short-term pattern that I'm working with. So a possible 5-wave decline in wave 1, and then maybe an ongoing wave 2 pattern. This could be either a zigzag, or it end up being an expanded flat. So where we get an A wave up, a B wave down to a new low, so a break of 92.30, or let's say a break of 92, and then a rally in wave C. I do think this is all corrective though, and I think in general we are going to see, once this correction finishes, I think we'll see a larger decline into a third wave, and that's the base case that I'm working with here. Okay, let's move on. It's the S&P, it's the 4-hour count. Again, we have that kind of series of declines off a possible wave 2 high. So I'm going with the expanded flat correction here in wave 2. Slightly different count in the Dow. A series of 1-2s in the Dow, but we broke to a new high here. So we've got this non-confirmation, I suppose. If you look between the Dow and the S&P, we've got like a slight new lower high in the S&P, whereas the Dow never broke above that let's say February high. So non-confirmation, an initial step lower again. This could be a series of 1-2s, and we will see how that plays out today. It could be, like I said earlier in the Dow, this could be an ongoing wedge to the downside, or like I said in the Dow, also a series of 1-2s. I'm not going to pin my collar on that one yet. We'll just see how the market goes today. This could also be a small correction before we see a slight new high again, which will, if we do see a break to a slight new high, we'll see an alternate count here of a 1, 2, 3, correction wave 4, and then a slight new high in wave 5 of C. So we'll create another point for wave C of 2. Doesn't change the overall outcome, to be quite honest. And we'll see how that goes today. Let's move on. Silver. I think silver is still pointing towards a decline in a wave C of 2, and that should probably, in a month or so, or even 2 months, that'll probably bring us down below $20 again. That's my let's say base case scenario here. I'm working with a series of 1-2s. I don't know. It's the action this week has been quite corrective. I'm taking one, let's say, piece of a chink of light here from this week. We could have a running flat wave 2, and we could have a spike lower and a corrective lower high wave 1-2 to begin a third wave decline. Obviously, we've got to see that 24.90 level hold, and we've got to see a third wave decline begin, most likely today. So that's where I kind of stand on silver. On Bitcoin, I've been kind of touting this ABC pattern up in a possible fourth wave in Bitcoin. We have filled a nice trend channel, a nice 3-wave pattern higher, and again we have this initial kind of spike lower out of that trend channel. I don't know. Well, at this point in time, I'm willing to suggest that this is a 1-2, again a series of 1-2s to begin wave 5 down. Minimum target for wave 5 would be break of 32,800. I would probably suggest that we might get below 30,000 again before we complete this 5-wave pattern or lower, and at that point then it looks like we'll probably rally quite powerfully in Bitcoin. Initially, it'll probably, if it kind of moves with risk assets in general, I think then, and with risk assets, I mean like the periphery of the stock market, the those risky ETFs, those high yields, those periphery markets. This Bitcoin will go into 2, and it'll probably spill down. And wave 5 of C could push it even lower. Who knows? Let's get to the short-term count. You can see, well, actually, this week I changed to. Forgive me. The initial decline. Let's go back to the 4-hour count again. I have to stumble over myself, don't I? I should do a a trial run before I start speaking and running my mouth. Wave C of 4. This is the possibility that I think that I changed to last night. A possible 5-wave pattern building in wave C of 4. So maybe one more high in wave C. It does not change the overall. I think wave C of 4 will complete. We could, like I said earlier, I'm going to rescue this. We could see this series of 1-2s build. Actually, I don't think that this decline is complete just yet. But if this is an ABC decline, let's see a 4th wave complete, one final 5th wave, and then we move down into wave 5. That is, let's say that is a reasonable possibility at this point after this week's action. Now, I have got a caveat there if you want another one. If this decline breaks this wave 1 high, if this 4th wave breaks this wave 1 high, so we've got a key level there, 42,300 or 42,330 if you want to call it that. You break 42,330 today, then I will probably. I'm looking back at this 4th wave pattern here again. I'm looking at a 3rd wave decline next week in wave 5 because we will have broken, let's say, the rules of a 5-wave rally in wave C. So keep that in mind right now. This is a reasonable pattern if you want to screenshot that and work with it for a few minutes, or today anyway. But watch that 42,320 or 42,330 level. What do I want to do now? I'm going to NASDAQ. Here is the 4-hour count in the NASDAQ. This is the larger 1-2 pattern that I've switched to in the Dow, or not the Dow, the S&P. So we've got that 1-2 pattern, expanded flat, and then an initial spike lower out of that expanded flat high. The actual, let's say, short-term count here off the high might be a little bit different. You could have a failed 5th wave here, and I think that's what I went with on the hourly count. But suffice to say, I think we should see 3rd wave declines next week. Let's get into here's the hourly count. Yes, so you can see if we've got a C wave of an expanded flat wave 2, you've got 1, 2, 3, short correction wave 4. This seems to be 5 waves up. Wave 5 did not break, so we've got a failed 5th wave within wave C of 2, and now an initial 1-2 pattern off that does seem to suggest that we are impulsively moving lower now, which would suggest a further decline next week. But keep an eye. I'll be keeping an eye on that anyway each night on the charts. And if you would like those charts, come to the website and check it out. As for me, and as usual, I always end these weekly video updates, and those of you who always click off can always click off now. Okay, now you're gone. Okay, so those of you who have stayed on, there's a reason that you stayed on. I would just implore you that, 100% of us humans die, and 100% of us pass over to the other side, and I will guarantee you it's not an empty other side, and I will guarantee you would like to end up on the good side of that other side. So you can either stand before God cloaked in your own dirty righteousness, as myself, we're all sinners. You cannot stand before a holy God with sin upon you, and that's why the Messiah came, to offer you the chance of a covering of his blood over your sin. And you accept the Messiah, that is the Lord Jesus. If you accept the Messiah, then your sin is covered, paid for in full, and you can joyfully pass over to the other side, cloaked in the righteousness of the Messiah. I'm sorry if I overly complicated it there, but that is the truth of it. That's why Jesus came to die. That's why God took on human form and came to die and pay for your sins. We all have our own petty gods. I would implore you to get rid of those gods, whether that be money or wealth or, a nice house or your new sneakers or your nice BMW. Those things are all going to rot. And you're still going to face God. So, there you go. That's the ABCs of salvation. someone came to die for your sin. Just accept that and move on. Enjoy. Okay. Thank you all for listening. Thank you all for clicking. And I pray God's blessing on you all. And if I'm still here next week, I'll be back again. Bye-bye.